Welcome to the Motor Carriers Insurance Education Foundation monthly truck stop webinars. These truck stops presented the second Thursday of each month at 11:30 a.m. Eastern Time. These webinars presented as industry updates for informational purposes only and do not qualify for state CE credit. The foundation provides numbers of state CE credit programs. If you're interested in obtaining state CE credit, please check our website, mcief.org, or email mcief@mcief.org for information about programs that do qualify for CE credit. If you have any questions, please type them in the chat window. They will be answered as time allows or responded to after the webinar via email. If you experience any audio problems, please send us a note in the chat window or call 800-741-4084. We'll attempt to correct the problems as soon as possible. Offering more than the policy. One of the foundation that I preached is the insured expects more of you than just delivering the policy. They expect you to help them become a better insured. And we want to spend time here with John talking about how he has used this theory to build his book of business and what he does to help the insured become a better insured beyond just selling a policy and selling price. So I asked John to help us with this today to talk about providing more than the policy to the insured. John, welcome. Tell us a little bit about yourself.
Thank you, Tommy. John Maimaron. I'm from Hub Transportation. I've been with the practice since 2013. I started my insurance career in 2009. I was a account manager for several years, learning policies and policy language. I started in 2013 with Hub as a producer, and my first line of business, industry sector, was auto repair and garages. I had several years of 100,000 revenue and more of auto repair shops, and then I ran into my first trucking account, and I realized that a 5-unit trucking account pays $5,000 to $10,000 in commission, where in auto repair you need to write about 5 to 20 of those to get that type of money. So when I seen that, I quickly transitioned into trucking in 2015. After writing my first policy, I realized the insurance part was easy, but the client had many more questions about regulations and safety concerns. And I was led to Tommy and the TRS designation. And Tommy's going to do a little something on what he offers and why I'm ready to go.
John, that's a good introduction here. I always thought, don't let the smell of the premium disguise the stink of the risk part of it here. And so you balance that part out. And so it takes more than just chasing premium because of the regulations. And I think you have been told or looked at, trucking is unique for many ways, but mainly because of the government environment and the information available for us. So the focus of the foundation is not only to tell the retail agent and the producer about a trucker, but the risks themselves and these kind of characteristics. And you've used this public information, have you not, to help the risk improve, and your purpose is to improve the risk. That's the bottom line, beyond just selling the policy.
Yes, absolutely. Where I'm from in Massachusetts, many of the trucking companies are in the assigned risk pool. So I was forced to sell service, risk management beyond pricing right off the bat, due to the fact that it is difficult to move policies in Massachusetts. There are some markets, but you got to be the cream of the crop. So in order to make a client the cream of the crop to get better pricing, I asked the client, do you want to save money? And usually the answer is yes. And I say, in order to do that, you need to create a better risk for yourself. Your loss experience, your driver portfolio, and your risk management tactics are how insurance carriers come up with your baseline. When you go and shop your policy, that baseline can change based on different characteristics, plus or minus $10,000 in my opinion. Obviously, the numbers change with the size of the risk, but what the overall message is to the client is that if you want to save money, it starts and ends with you. The shopping your insurance policy is only going to get you into a certain amount of savings that's capped. To really change your pricing, you need to change your overall risk characteristics to bring your base premium down. And that is a 3 to 5 year long-term play. And in order to do that, you would want to work with somebody such as myself.
So you say, come to me and I'll help you become a better insured, which is one of the purposes here. In fact, that was one of the webinars we did last month about the standard insurance program that we did for CE credit here. John, that's a good point here. So you went to approach it. John, as you just talked, the for-hire motor carrier needs more to be a better insurer. We need information that you care about government, how they operate. So how have you grown your book of business by providing more than the policy?
Yes, it's a good question. So first things is working through referrals on your book. Start with the clients that you have helped, and by helped, not shopping the policy, how you help them with services. Ask them for referrals. But for the most part, to grow my book, when I visit with clients, I like to talk about commissions that are earned by the agent that they're working with. When I highlight that the agent earns 10% of the premium that you're paying, or 8.34% or 15%, depending on the policy and where it's placed, it gets the client's eyes open and says, what services are provided for you with that X amount of commission that you're paying? This then gets the client engaged. Are they doing a timeline of services? Do they have an ongoing fleet safety management program and risk review with the agent? Are they following up on open claims? And you can see a lot of this data through several different third-party vendors that you can then focus on, and Tommy will talk a little bit about those different vendors.
So you point out that there's more out there than a policy, and they should expect more from the insurance agent than just delivering the policy. You talked about selecting the risk. Everything starts with selecting the risk, and that determines who you look at, because you don't want to waste your time with someone that's been a risk forever that's not willing to help. A friend of mine talked about a lot of in the past, you need to know when to hold and when to fold. Some of them, it's not worth chasing unless you got a better program. Massachusetts with assigned risk is kind of unique, but another part of the marketplace is there where there are competing markets. If they've been one for a long time, I assume you agree with me that it's better to keep the insured with a risk other than assigned risk with the same carrier as long as possible to build up the credibility, unless you got something really special here. So you use a third-party provider to help you guide yourselves into risk selection. So you check those first. You use carrier software, but we other have members of the foundation, central analysis bureaus, and others that provide this information. So you go on their website, John, and you look at that information, and then that tells you something about the risk. So how do you walk through looking at that public information that's provided by a third-party provider? Carrier software is the one I know Hub uses, but again, a lot of the risk ratios we're talking about is through CAB. Would you agree with me here, though, before I tell you, the retail agent cannot be successful in this marketplace without a third-party provider?
I do agree with that. So there's several different ways of going about utilizing this data that's at your fingertips. You can work with a specific insurance carrier and know what their appetite is, and by appetite I mean, what are they looking for in CSA scores? Does 2 alerts bump this carrier out of the game? Does a significant crash ratio bump this carrier out of the game? So you can signal down exactly with what that special relationship that you have with an insurance carrier partner, or you can do what I do, and that's work with any client that you could find a problem or a wedge to speak about. For an example, if I see very high unsafe driving scores, I am not leading in with, I'm going to save you money. I am leading in with, I identified this trend and this exposure. Here's some mitigation opportunities to help bring your risk up to a more acceptable level based on the carrier's appetites. So all of that data you can use in different ways.
And we have one here. You mentioned that in Massachusetts, a lot of assigned risk. You do have some preferred markets in Massachusetts. I used to do some work up there with the PIA and back in the CIC days. So if the current carrier is with the assigned risk, for example, here, and you know you can improve them and move them to a more preferred risk, you look at the ones who have those first. And we also know we have risks who specialize in new ventures, that's a little price higher than others, and we look at risk, as you just pointed out, who have an appetite for certain CSA scores and wants to improve there. So you look at the whole low-hanging fruit there, do you not? I mean, if they've been with the preferred risk for a period of time, you're going to waste your time a lot for that. And then you look at where you can improve them. There's different sizes. Do you look at 2 or 3 units or larger? In fact, I know a lot of the marketplace, obviously, I just did some statistics on the program we're putting out later. 95% still have less than 5 power units with MC numbers. So that's the great majority of potential insureds there. And there's a lot of cost to do all this, those small ones, but they need to be listed too. So do you focus just on larger risk, or do you at least get an introduction to the smaller ones, even though you might have to push that down to a CSR or somebody else to do the daily management of them?
Yeah, that's a good question. For me, at this point in my career, I'm prospecting 10 power units and more. I do still tend to get referrals for that under 10 space. I will work on 5 to 10, but like you said, it'd be a little bit more automated with the 5 to 10 space. The 10 plus space, the whole presentation from the beginning of meeting the client until 10 years later this is an ongoing process. Saving money starts and ends with you. If we focus on these areas on a quarterly basis and on a monthly basis, we're focusing on open claims to drive and to close them. That will improve your loss ratio, your CSA scores. Improving your CSA scores will then also improve your frequency of claims. There's direct stats that correlate that good CSA scores tend to have a better loss performance, and explaining that to the client, that you're not in just this 1 year, predicament of your insurance. You have to build over a period of time, and the destiny is controlled by you. You calling 35 different insurance agents and blasting the market is only going to get you plus to minus $5,000 to $10,000, depending on your risk characteristics, because your loss ratio is already telling you what your premium is going to be. So my goal with fleets is to meet on a quarterly basis to discuss risk trends. And if there's open claims, I try to have them meet with my claim staff on an open basis on those open claims.
Yes, you also know Carrier Software and CAB have ability to track their CSA scores on a monthly basis, which changes monthly. I know that you all use that also as a technique, as a service there. And a smaller risk, they don't have time to track those kind of scores. So you start off by explaining to them what drives their premium. And it's not just shopping the carriers, it's what the carriers looked at and explain I use the word where the pain is. This is part of it. From an underwriting standpoint, are you finding that a lot of your insurers don't even know this information is public and that you have access to it?
Sometimes or I would phrase it more that they know it's public, they just don't know how to utilize it. They don't know how to read it. And I think the government's website makes it a little bit more confusing than our third-party vendors do.
So now you've got the risk put together and you know that you're going to deal with the risk you want to look at. Then the next thing is you got to go have a meeting with them, right?
Absolutely.
So when approaching a motor carrier for the first time, how do you move the focus from price to service that you can provide? So you got a few examples about the lead into that, then we'll talk about how to get through the front door here in a minute.
Yeah, I would say the lead in is always to take that information that you have from carrier software, utilize that to start to build the story, and then meet with the clients to fill in the gaps. For an example, if they have an unsafe driving issue, the thing I would want to talk about is highlight the pain right up front. And this goes back to in the marketplace as well as with the insured. With the insured, you're saying, I'm highlighting the pain up front because I know that the underwriters are going to talk about it. And if we get in front of this, point it out right away, and then provide a mitigation technique around those errors and those areas and those issues, we're going to have more success in the marketplace. So it's really about explaining to the client how pricing works, which we just discussed, risk characteristics, loss ratio, baseline premium, plus or minus on credits, explaining that to the insured and explaining how to improve that, and then putting a narrative together.
But John, how do you know who's the worst driver? And by the way, he's my son-in-law, and I can't afford to fire him because then I have to pick up my daughter after that. So do I have to do that?
Yeah, I mean, that's a great question. What I would suggest to do is to show them on paper what the percentage of points that your brother-in-law has over your overall scores. That's something that cab and carrier software can do. They can highlight your top 5 drivers that has the most accumulated points based on severity, time element, and total overall. So you can utilize that data to really signify to the client and illustrate in a graphic, if you would like. I put them in graphics sometimes where it says, you know, VIN number 1, 2, 3, 4 has 40% of your points. Now you're bringing that and showing them, the client, how strong and powerful that keeping that driver on your policy is reflecting on them.
So what we're saying here is that you do a lot of preparing before you actually have a meeting with them up front. How do you get that first meeting? Do you solicit it? Do you send slow mail, email, have someone, you make a phone call, or have someone in your office making a phone call trying to set that up? Does that, because you know about them now. One thing, if the audience doesn't understand this, their phone number, email address is in public information. And so you can get that from Safer or, again, Carrier Software or CAB. So you have the contact information. So how do you actually get that first appointment?
Yeah, so I'll just, based on my career, the 5 to 25 space, I've made an abundant amount of cold calls. And I would cold call and I would find some kind of wedge or pain point from the data that we have. Besides saying, I'm going to help you save money, I'm going to help you improve your risk so you can save money. And I would make that phone call over and over again. The 25 to plus space, those are usually done through referral. Once you do land one 25 unit, 50 unit account, you ask them who they know, who they can introduce you to. They might say no one. Next week, you ask them again, and all of a sudden they've met someone within that time period that you haven't asked them in 6 months. You just continuously ask for referrals every time you bring value to that client. And that's how you get into the bigger accounts.
So you do, when you call, but cold calls, you just do phone calls and try to set a meeting up and try to get the principal there, that meeting. So what's your hit ratio for meetings that you think you want to?
So, yeah.
Because you're wasting a lot of time. You know, as one of the theories that I teach here is all you have to sell, John, is your time, whether it's cars or insurance or shoes. And so there's got to be a return on your time. We already talked about how successful you have for selling these providing these additional services beyond just a policy, but you've got to be successful at that. You just a smooth talker, or you go to church with them, or what do you do with that?
Yeah, so the reason, I'll be honest, I mean, I built $1 million book of revenue off cold calling. That is what I'm good at. That's how I've always built my book. What I think differentiates me from the pack is my direct language that's not scripted. I am calling a friend and I'm telling them that I can help them with confidence because I've already assessed their risk and I know there's areas where I can help them. And I think my confidence over the phone translates to that trucking owner. And he is the same way as I am. We're entrepreneurs. We have to hustle to make money. We have to work hard to make money. And I think when they see that I have that same exuberance that they let off, that there's a connection to be made. And they say many times, they say, I get these phone calls all the time. And I would ask, why did you choose me this time around? And he goes, you're just talking about things that are different than what I normally hear. And that's, hi, this is so-and-so from XYZ insurance agency. I can help you save money. And they don't want that.
That's a good point. In fact, one of the more memorable times in my life is when I did this and did proposals and all this kind of stuff. And the client actually chose me over the incumbent carrier, even though I was more costly. And I said, Cliff, why did you do that? He said, because if I got in trouble, I trust you and help me bail you out. But one thing that you brought back to this, let's circle back to what we talked about earlier. two things you had. You had the knowledge of the industry and all this technology and stuff. An agent who did not go through the process of learning about the business, meaning the TRS designation or any other service here, is not going to be successful that way. You also use a third-party provider to find out all the information you can about them. You've done all this before you even approach them. Then you use this third-party provider to decide who you might be sensitive to the pitch you have. So all those points, knowledge about trucking industry, knowledge about their insurance, knowledge who they are, what the public information is, where the pain is, you do all that preparation before you make your first phone call.
100%.
And without that, you're not going to be very successful. So let's talk about what you look at now. Because the problem, our objective is once you get that first call, you want to get beyond the front desk. And because a lot of times that's the resistance here. Somebody's paid to not talk to the boss, or for a smaller motor carrier, that person that you might contact might be a spouse or a family member handling the paperwork and this stuff. And so how do you transitionalize by you now have the appointment to make sure that they understand, other than your fast talking and your smile and that stuff, that you can do these kind of things? How do you explain to them about the mechanism you have that we talk about?
So you can do a number of different things. You can bring in visuals with the data that you get from carrier software or CAB or CAB. I think there's the CAB, but anyways, you can use that information and bring in visuals to highlight their trends that are negatively impacting them. And then you're going to ask questions about drivers. And I think that's when you can really get the client to open up and start to talk about their drive, how they're hiring drivers, how they're retaining drivers, are they doing employee incentive plans to be safe? All of these things then come up in the meeting as long as you're asking the questions. Once you get all of that information, the next piece of the puzzle is the loss runs. When you have the loss runs, this is where you can show the client exactly what you do as a retail agent. And that's either provide a target number that they should be paying based on a 55% loss ratio in the past 5 years, or you can show them that, hey, you're getting a really good deal because you have an 80% loss ratio in the last 5 years. Using that loss data and using all of the information that you got from CAB and all of the information you got from their driver retention program, then now you're in the position to really assist the client going forward. You're highlighting areas that he's having trouble with, and you're showing and illustrating and selling the areas that he's having a really good time with. And transparency from the marketplace to the client is what they appreciate.
So you explain the point that we're making here. You explain the pain first, and then you talk about the coverage, that part. Now you talk about auto. We mainly focus on auto liability here. Do you focus on another line of coverages? And the one that I focus on more than other, because this is the place where you don't really look at it, John, until it happens. But to me, the cargo form is the most critical policy form for them to understand, beyond just the nuance of having the right drivers and retention and this stuff, because that's where they can really lose their whole business by not having the right cargo form.
Absolutely. Cargo is usually the last topic of discussion because it's the least amount of premium, but it is the most important because it's the only time where you as an insurance advisor have the opportunity to really advise on coverages. Usually with the auto liability and the FIS, there's a lot to talk about as well with deductibles and towing and storage and wreckage. But for the most part, your knowledge of the coverage form really shines on the motor truck cargo. In my space, I have a lot of reefer carriers, and it gets even more convoluted with reefer. Is human error coverage? Is mechanical breakdown, do you have to have 30-day maintenance slips on that reefer unit? So those policies really matter. The language in those policies really matter when there is a claim, like Tommy is saying, and you preparing the client before there's a claim and educating them before there's a claim is where you're going to shine.
And that will be, how do you look at the loss runs? Do you ask them for them up front, or do you just go through the losses, and do you ask the question, have you had a cargo loss lately in this? How do you open that door? How do you know that you need to talk about the things that aren't public?
Yeah, so that usually to me is something that comes up front because, like we just discussed, the CSA scores are going to show you trends in unsafe driving behavior. So if those trends, vehicle maintenance is high, unsafe driving is high, and their crash is high, you're going in there already prepared that you know there should be losses behind this data. So I would start with saying this is public information. You had 2 large towaway crashes in the last 2 years. Can you explain that to me? What happened? What was the process of filing that claim? How was the outcome? What did you do in between? That's where you're going to get them talking about their claims. Sometimes they're even going to say that they had pain in servicing that claim. There's another area where a retail agent can shine. So yes, Tommy, you're asking these questions before you're going to market. So when you do get those loss runs and there's a hairy claim on that, you're ready to explain that to the underwriter. You're not just saying, oh, I didn't know about that, showing the underwriter that you don't have the confidence in this account.
You know, we can summarize this down to probably one sentence, John. It's one that we preached earlier too. Why do you want to do business with me? And so you give them a reason to do business with you by pointing these things out. And again, we just went through a crisis last year about the valuations of physical damage trucks just ballooning up here. And it's been our recommendation that you needed to contact the insured midterm to redo their physical damage quotes. This is the kind of service that you talk about providing that you don't get paid for, but you really do get paid for because that client stays with you. And this is the situations that you have now. You mentioned the reefer operation. You do a lot of food goods. You talk about the Food Safety Food Modernization Act with them and some things like that that they have to be aware of concerning the handling of food goods, because that is a real pain.
Yeah, I do talk about it with them, pointing out, where the coverage is intended for, what its language is saying, and then I also request a copy of the contract. Sometimes you don't get that copy of the contract from the client, so you don't know, is the broker responsible for this, or is the shipper responsible for this, or is your client responsible for this? That's the main thing that I would request, is to have a copy of the contract and take that contract and see how the policy will respond to it.
As a part of that contract, we also recommend underwriting is that sometimes the shipper, the broker, requires some unusual coverages that they don't understand about additional insureds and waiver of subrogation and contributory, primary non-contributory, all these other kind of stuff. Do you also ask them who their customers are and what requirements they have for insurance for their customers as a part of the underwriting process?
With their direct shippers, I do. With the brokers, because they're utilizing different brokers at different times, that's on kind of an ongoing as needed basis. When you get a request that's something that's out of the usual, that's not the norm for them, then you're asking for a copy of the contract and finding out what they're doing. The next thing that I can bring up is also making sure that whatever good that they're shipping, that their cargo is not excluded in that property. I've seen that electronics as well.
Well, copper and electronics, and I just had a case out in New Mexico that had that same thing. That was excluded electronics. These electronics were parts of a microwave.
Yep.
And the truck burned up, and they excluded it because it was electronics, even though it had nothing to do with theft. And these are things that you have to drill down to. And the reason that we point this out is this is something that we recommend copies of the policies and understand this stuff going in to make sure they can handle that. We do have on our website, John, I don't know if you looked at, about the additional insured, the sugar pill, to determine that everything you just talked about, the auto liability coverage, additional insured, non-contributory, primary, and waiver subrogation are built into the standard auto policy without any endorsements. And
yes.
There's so many brokers and agents who don't understand that part of it. The only thing, any endorsement we add, additional insured endorsement, actually gives less coverage or the same coverage that's already in the policy. have you run across this situation sometime where you had to explain this? And this is why we got a white paper on our website with Rob Mosley's signature to take care of that part, and hopefully that can overcome. But dealing with the brokers and shippers, sometimes they don't want to hear anything.
What a topic you just brought up. Yeah, so again, we talked about the ceded auto risk, Massachusetts assigned risk pool. They will not allow these endorsements, but I have successfully defended clients of getting a contract saying that if you sign a written contract and you agree to waive your subrogation before signing that contract, it's now valid and you can run business for them. So I cut and pasted the part of the insurance policy that says exactly what Tommy just brought up. And I said, we cannot name you on a physical endorsement, but if you trust the policy language that's written in front of you, this client is okay to do business with XYZ. After review of 3 different legal departments, we got acceptance on that.
Well, you know, we would do legal departments here. That's the provision C of the motor carrier's coverage form, or D, I mean, C in business all of the motor carrier, where it says anyone liable to conduct insured above. And also, I love that waiver subrogation. As long as you've done it before the crash, you have the right to do it. The insurance company cannot impose more than that. And it's always primary because it's the covered auto versus non-owned auto, which is secondary, and you can't seek contribution for someone who qualifies as insured. Those are the situation. This is why we wrote on our website, meeting the customer's needs and also this other stuff. So refer back here, because those are things that an agent who does experience this, if all they do sell policies, won't get forward, or if they do, it will have a problem when something happens later. The insurer's going to be upset with them. This is what you need to be prepared for doing it.
Yeah, you bringing that up, I forgot about that. That was 4 years ago, but it's a contract that provide, like, it was an additional 20-30% of revenue for this client to get that contract. And they could not get the named endorsement that they needed, but explaining the policy language and showing that to the client and getting them to agree on it not only helped us, retain this business, but also make the client an additional 20-30% of revenue.
Yeah, and this is why we wrote those white papers, and I refer back to the site. So you get a quote, you get there, and now you go into present it. You focus again, you focus on the service here, and you look at, say, here's this quote now, here's what's maybe cost you a little more, what this carrier found a little problem with here. In time, we can work on this and then start working on what the underwriter pushes back with you. Because I guess you did like I did. You're also in risk management. I was able to write a lot of risk because I took that extra step and provided the service, and underwriters trusted me that I would do that. You're doing the same thing. So you only get halfway, but then you can give them a picture that if they get better, because I know that both carrier software and CAB says if your inspections stay level, they'll go down in 6 months. They'll go down every 6 months, and now you're going to look better. So if you do everything now, you're actually going to look better in 6 months by doing these things. Do you show that to give them a carrot out there to try to hang on to?
Yeah, so I'm reluctant to share all my secrets, but I did realize that
I'm paying you to do this, John.
For sure. I did realize in this business, though, that a lot of the times the clients think the value of the agent is to sell them a policy. So I looked upon myself and said, if I was to share what I do to other retail agents, at least the value of what an agent does becomes a higher up on their pecking order, right there with the CPA and the attorney. That's what I would like an insurance agent to be known for. So anyways, what I'm saying is, when I go to meet with a client on presentation day, I copy and paste in a marketing results summary page each insurance carrier's opinion of that trucking company. Even if it's a declination, I'm putting declined and the exact words from the underwriter. So I can look the client in the eye and say, if we focus on this, this, and this in this next year, it's going to open up 3 markets. And then now you got their buy-in, because you went to 6 different insurance carriers, only 2 presented a quote. What was the reason for that? Now you're saying to the insured, how do you expect me to leverage these insurance carriers, the 2 that provided a quote? How do you expect me to leverage them to get pricing relief when 60% of the marketplace declined on these 3 reasons. If we focus, Mr. Client, on these 3 areas of concerns in this next year, you are now getting 5 quotes, and now we can go back and negotiate.
So this is pointing out, again, the pain and all that. So you did 2 things here that a lot of agents don't do or don't know enough to do. First off, I like that idea about showing the coverage. Point out the coverage, because now when we deliver the policy, we got to tell them the coverage they have, because the first thing they're going to use is that certificate of insurance. So when you deliver the policies, you make sure that all the coverage, all the certificates are there. They understand the coverage, and they understand that beforehand. And the same thing here, you understand what the underwriters look at and show them why. A lot of times they think it's you, and it's not really them. And once they see more than one underwriter looks at it, now they're not being picked on. This is the kind we sometimes aren't willing to share this information with our insurers, but I think it's very important for them to understand the process. So again, circling back where we started, unless the agent understands the process, understands what the underwriters look at, this is what our advanced underwriting class will do for us, that we just got through with in January. We'll do them later. The part of it that these things will help them understand what the underwriters look at, so they're able to prepare these things that you have, John, that you learned by doing the TRS designation. When you deliver the policies, do you explain this is the bugaboo I have, what it means to be a covered auto, and the symbols and this kind of stuff to warn them, to tell you about these autos up front for the use of, as well as do you always offer general liability with your policy also, and kind of forced on those things, and tell them about if it's a reporting form, how that works. I mean, you spend time with them. The last thing I want to ask you about, do you also go through the process of when a claim happens, they got to report it, and how they report the claim? I mean, again, preparing them for more than just paying the premiums, what I'm talking about here.
Yeah, so you asked multiple questions, and I'll try to break down one at a time. So the first question, the first question is coverages, symbols of autos. Symbols of autos, you do want to explain that, and you want to make sure they understand the difference of coverage versus rating. Rating is something that could either be done on an individualized basis, which is scheduled auto, and that's explaining to the motor carrier that you have to schedule each VIN number in order for coverage to apply. Some rating is done by a monthly reporter, which could be the revenue basis, mileage basis, or unit basis. You got to explain that to the carrier as well. But you don't want to confuse the two. You want to make sure that you're having a conversation about coverage and a conversation about rating, and understand and explain it to the client so they understand that the two are not always exactly connected. If you have any covered auto and you're reporting based on units, you're still going to have coverage for a unit that wasn't reported. But there is a rating error in that situation. So that's the coverage symbols and how rating can be done. The next question that you asked, Tommy, was talking about
CGL.
Yes. So the the general liability, the CGL policy. I always provide that as an option. It's rated based on payroll of non-drivers, usually mechanics, and warehouse payroll is included in that. And the reason, when you have mechanics and warehouse, there's actually a significant exposure there. When you do not, you only have dispatch, and they're just dispatching 10 trucks, but there's no warehouse, there's no mechanical work being done. It'll be rated off of 26.5, which is the minimum premium for that class code. And the reason, to the client, you can simplify it and say, you need this for the majority of your contracts. If you want to explain the coverage to them, that's going to be loading and unloading exposure, how that works, mobile equipment, if you have any forklifts on the trucks, stuff like that. You can explain the coverage, but at the end of the day, if they say we don't need this, there's no exposure, you're still saying majority of your contract's going to ask for it. You're going to call me in the middle of the year, and then I'm going to have to scramble and place it for you. Let's just go ahead. It's $2,000 a year.
John, that is the exact story that I do, is that they're going to pay more, they're going to lose more from the load they didn't haul because they didn't have it than what it's going to cost them in premium for having it. And in most places, it's only $500–600 in this area. Now, Massachusetts might be higher than that part of it. Now we're talking about delivering the policies. You go over the importance of reporting claims and about all claims, and have somebody set up to accept the claims and how to train the driver for if a crash happens, what you might need.
Here's the driver's accident kit. I provide this for every driver. It tells them what photos to take. It tells them get a witness statement if you can. So, and then there's also the Fleet Safety Manager's Accident Response Kit. This is going to be a driver question and interview form, a checklist of what they need to report the claim. So working with the Fleet Safety Manager or the dispatch, depending on the size of the account, you want to explain to them what the responsibilities are from each party when there's an accident. Usually there should be a protocol in place. I think these driver accident kits are great to give to your client because they have one uniform reporting system for all claims for all drivers. I think that's the best way to do it. And I say even in a fender bender where no one's hurt, you still want to get this filled out. You still want to get a witness statement. You still want to take photos because that fender bender could turn into a $60,000 reserve once they phone stone on the billboard.
Yeah, and so what we talk about is you get an appointment because you know enough about the insured to get in the front door. You prepare yourself for them by not only the knowledge from TRS, but the knowledge about the insured by using a third-party provider. Then you explain them what the insurance market looks for. And I like your idea, even examples from underwriters and push back. So there's really things you can put your teeth in. It's not just John saying it, it's what the market is saying here. So we do this. Then you offer them the supplement coverage. And same thing with cargo, and you offer the problems with cargo that could have in the past or future have, because we know that some cargo policy, my comment in cargo, John, anything beyond the first paragraph will cover you for your legal liability takes coverage away. So the more pages, the worse the form is. But I assume you read the cargo policy, you have a book of screening those beforehand so you know which cargo forms you want to deal with certain insurers.
Yeah,
so
I put a whole spreadsheet together. Well, me and my team, whole spreadsheet together on all the major brands that are out there, where their weaknesses are, and that way, you know, if they update their form, you can update your spreadsheet, but that way you know which carriers you're looking to get quotes from, as opposed to putting them with an inferior product for cheaper money. You're in front of it. You get all those avenues corrected before you present it to the client.
Now you got the quote and you presented it, but you presented with a carrot there. You're showing them where in the future dealing with you might avoid a crash, you might have a cargo cover that you don't have now, or you might be able to improve their driver scores so they're more acceptable in the future. So you don't just do the price, you put out where they can improve and why they need you to help them improve.
Absolutely. And you're also talking about all the different ways of insuring a business, which is traditional captives or InsurTech or self-insurance. So there's several ways of
you have here, and the risk, the various risk and the security and this kind of stuff, sophisticated. You deliver the policy, you go over the policy, particularly symbols and the premium and what generates premium. But I like the important part of it because we also fail again to talk about when a crash happens, what needs to be done. Because
Absolutely.
That's where we're all here. And so I like the idea, and I know what Hub has available. Those things we teach about putting those programs together in advanced coverage again that we did in January. We'll do it again in March for the people who want to sign up for that to go over what needs to be put in there and what the driver needs to do at crash site so they're prepared for those things, because that's the moment everybody panics. And the more you practice, the more you have in place, the better off they'll be able to handle that particular area. So that's a great idea on this part of it, John. So you contact after delivery of the policy. Do you help the insured get better? Do you track them during the year?
Yes, I was saying a little bit about it in the beginning of the meeting, but I would say for fleets that are 20 and above, it's quarterly. Fleets that are 10 to 20, you're doing it every 6 months. And in those meetings, what we're talking about is CSA scores, the trends in the last 6 months, which is all in the red. When I meet with a client on a quarterly basis, I'm talking about what's in the red, because that's what just happened in the 0 to 6 month time period. And then we're also talking about open claims. How can we close them? What defense do we have? Is there camera footage? Is there a driver interview form that you want to share? We're really just trying to, you know, hold the adjusters accountable on a monthly or a quarterly basis, depending on the severity of the open claims.
we have technology here. You obviously mentioned event recorders. You push those, and because carriers doing this, and even both Florida and not, explain how that will make it better when the crash happens. Know all the details, and have some. Do you have any incentives for truckers with the cameras and all? What you just refer different programs for that? Because I think we all believe that that's where they need to go.
So yeah, no, it's an excellent question. Event recorders and cameras, I always lead off with, there isn't a direct savings, meaning my insurance policy is not going to wave a magic wand and give you a 5 to 10% credit. However, there's an indirect savings, and that could be an at-fault claim turning into a not-at-fault claim, or that could be a $1 million claim turning into a $200,000 claim, and I'll give you examples on both. The first scenario where it's an at-fault accident that turns into a not-at-fault accident because of the camera footage. I had a client that was in the third lane. He has his camera on. He is not moving. The light turns green. He begins to go. A passenger car comes right in front of him, and he hits him in the rear end. Now, 9 out of 10 times, a rear end collision against a trucking company is going to fall on the trucking company without evidence and proof of what happened. He showed the video. That claim, the attorney disappeared. They stopped the lawsuit that they were going after my trucking carrier. And the next day, I get an email from the client saying, "Thank God you suggested those cameras." So that was one instance. The second instance is where you have a potential $1 million claim turn into a $200,000 claim. What I mean by that is we take accountability with this video. We share that we were at fault. We say what needs to be done to close this claim right from the get-go. The adjusters can then start to negotiate without putting money into the case.
That's well said, and those are everything you just said. It's the way you want to share this thing, but with these examples. And again, we talk about keeping up the CSA scores on a monthly basis because you can subscribe to that. And again, if you're riding the risk of the accident happens, you have a visit with them about the accidents, right, John? This part of it, crashes, either you or loss prevention people.
I'll throw a plug in. I also spent I think it's $3,000 to $5,000 to buy JJ Keller video on demand safety. So I pay for that subscription to offer to my clients. So like Tommy says, if there's a driver that has a speeding, if there's a driver that has an accident, I follow up with my client. I say, here's the catalog, pick a video. This is strike 1 for that driver. Strike 2 is suspension, 3 is termination, depending on the client. But if that's their handbook, I am providing a JJ Keller for the first time offenders remedial training. That's a great
point that we have here. Well, John, that's all we have here today this morning, or part of it. It's almost noon in some places. We're going to finish here. We really appreciate your time, and we look forward in the future for you being a part of our programs. John, thank you. Any last words you want to say?
Keep on trucking.
That's a good idea. Keep on trucking. We're out of here, John.
Take care. Thank you.